Here we are right on the edge of potentially seeing a really big breakout. Bitcoin is literally right at its lows, and we haven't actually been lower than this current level since the 17th of March to our current day. That makes this 55 days that we've been at this level, and we are now retesting the lows. And there is a lot of fear, rightfully so, that Bitcoin might be dropping down. So I'm going to be giving you 3 extremely compelling reasons for why that might happen, but it must all be taken with a grain of salt, because as I've been saying, I'm still not actually particularly bearish on the market, even though we're at these lows. And I want to make something very clear. I've been saying for a while that I would love to see a $25,000 Bitcoin. That would be a really healthy correction for the market, and I still believe that to be the case. But there are some really strong reasons that I still believe we might not actually be ready to dip that low, because that would be a $2,000 drop from where we are right now. And I don't know if we actually have the setup to produce that kind of drop in this market right now. And I want to show you why in this YouTube video, along with 3 compelling reasons for why it will happen anyway. I've made a lot of money with my current Bitcoin long position, which I'm still trading. And the reason that I'm able to pull off trades like this, and the reason that I'm able to be the trader that I am, is because throughout my entire process, from starting to finishing and beyond, I'm always checking myself. I'm always challenging myself. I'm like a scientist, right? I'm not interested in proving myself right. I'm trying to prove myself wrong. And that's why I have to engage in experiments like this and thought experiments like this, where I really play out both sides. And I want to do that with you on this video. I'm going to go through 3 really compelling reasons, but before I do, let's look at traditional finance and why I don't think that's going to happen. And it's, S&P 500 still at resistance. Now look, we might have a situation where Bitcoin decouples from the S&P 500 such that we're still in a strong position here, maybe even break out, but Bitcoin drops. Could definitely happen. Wouldn't be the first time. Wouldn't even be the first time this year. But generally speaking, the correlation between Bitcoin and the S&P 500 is very clear. If traditional finance markets are looking strong, Bitcoin generally performs strongly as well. So S&P 500 is still at resistance, not doing anything bearish whatsoever. It's producing beautiful chart patterns right now. It's just continuing to develop them and take it to maturity. So I'm very, very happy with it. Gold, it's only finding support where it was previously finding resistance. So again, perfect signs here. Gold looking really strong. The only conceivable reasons for me for why Bitcoin has dropped down to where it is right now is because of the dollar. The dollar has been trading within this sideways range since it fell down here at the beginning of April, where it's kind of just fluctuated between 101 and 102.2. And that's basically the high that we're at today, and that's the only real thing that's happened in the markets. You could say that this is because of interest rate hikes or whatever the case may be. It doesn't fucking matter. Ultimately, the point is that when the dollar performs well, Bitcoin tends to perform poorly, and the opposite, right? When the dollar is weak, Bitcoin tends to perform pretty well. Well, right now, the dollar is at resistance. Will it break resistance? It's certainly possible. It would be nice to see another test of, say, 103, 104, and then dropping down. That would be a really nice, healthy pattern for this chart. But it hasn't been able to produce it so far. We've seen so many attempts at this level which have all failed. And if this is going to have the same fate as last time, then what it actually means for Bitcoin is that we're probably at the lowest point that we're going to reach, and it's only going to go up from here. I'm not saying that that's going to happen, but we are at a resistance level, and we've tested it a lot for the dollar right here. The dollar, with its chart, it doesn't behave like most other charts. So, I am going to take resistance seriously, and I think that that's why we've moved down anyway today. But let's bring it back to Bitcoin, because this is where it's really interesting. And if we do fall down to 25K, this is a really nice range. From where we are right now down to this level, it's like an 8% drop down to 24.8, which is very tradable. This should be a very tradable range. An 8% move, 5x leverage is a 40% profit. 10x leverage is an 80% profit. So this is a big deal. It's not something that we should just kind of brush off and not pay attention to. And there are amazing opportunities to take advantage of the volatility in this market. I'm going to be outlining for you guys the kind of positions that I'm interested in taking, but I want to highlight to you guys BingX if you're interested in taking advantage of it. Obviously, you know that Bybit has implemented mandatory KYC 3 days ago, but BingX does not have any KYC requirements. You don't have to submit a picture of yourself or a picture of your ID, and you're going to get over $5,000 in bonuses, which is very, very cool, plus access to traditional finance. Obviously, you can trade Bitcoin, Pepe, all the shit coins that your heart desires, but you can also, if you take a look at their derivatives section, you can also trade stocks, forex, indices, and commodities. Gold, for example, right here, S&P 500, Germany's DAX, FTSE 100 from the UK, all without KYC using a Bitcoin deposit. That is very, very cool, and it's worth checking out if you're interested in getting over $5,000 in bonuses. And if you want Bybit's bonus, they're giving you up to 30K in just straight fucking cash that you can throw into the market and trade it any way you like, which is very, very cool. So if you're interested in Bybit, check it out. But whether or not you care about the KYC news, the fact that you can trade these traditional finance markets in addition to crypto is a big deal. So definitely check out BingX using the link in the description down below. Here's the things for why Bitcoin might be dropping down to 25K though. And I actually want to start with just like a bonus reason. You know, if we look at where Bitcoin is, it's been 55 days that we've been up at this resistance level and we haven't broken resistance yet. So at some point, if it's been a long time and we haven't broken resistance, you do have to start asking, well, maybe we just kind of have to revisit the lows. I don't necessarily fully subscribe to that kind of thinking, but I do think that there's some truth in it. And, you know, if we can't break out on the upside, you know, a lot of the time we do have to test the downside. And I think that's exactly what we're doing right now. You know, these tests that we had up here were not successful. So naturally the market wants to see what happens at the lows as well. Does that mean we're going to break the lows? Absolutely not. But obviously right now we're on the edge of it and everybody in the NAN thinks that that's going to be the case. If we take a very quick look at the 𝗬𝗙𝗥𝗙𝗚𝗓 dashboard right here, we've got a very good fear and greed index level, which will update shortly, by the way. I think that we're pretty much towards the end of the day. Yeah, about 5 hours left until the daily candle closes. By the way, for those of you wondering, when I talk about the day, I'm always talking about the UTC time zone. That's the only time zone that we care about as traders typically. So fear and greed index is okay. It's closer towards neutral territory, and this has also scaled back a little bit. So long and short ratio is in a slightly better place, but we're still a little bit too, you know, neutral territory, considering how, you know, concerning some of this price action has been. I think, you know, we are a little bit too optimistic, and long and short ratio, there's still way too many longs. Okay, so these are more bonus reasons for why the market has to come down. You know, to see a good reset to where the market can genuinely start rising to some nicer price levels. We're not going to be seeing, you know, retail piling on in the long direction, right? That's just not how it happens typically. It might be what happens now, but that would be very much the exception and not the rule. So, you know, a drop to the downside very much called for. And if we take a look at what that might actually come in the form of, this is where things actually get quite exciting for Bitcoin here. See, the first crucial reason on this chart is that it just has been a long time, and we've tested this level many, many times. And if it does fail, our next support is $24,000, $25,000. You know, that's kind of all we have between here and where we are, meaning that if we are going to kind of collapse below the floor that we're at, it's really hard for me to see where there's support anywhere else on this chart. If you look between this green line and this green line up here, there is no price action. There was nothing at all back here, and there's one wick and then one massive lightsaber candle. There is no development here that indicates Bitcoin should be able to bounce anywhere between these boxes. So I have to expect that 25K might be the next area of support. The second big reason is to do with some triangles. This is pretty fun. If we take a look at these triangles right here, we had this one triangle right here that broke out really nicely to the upside. It produced a 10% move to the upside. That tells us that right now the market responds well to to chart patterns like triangles. If we're breaking out of triangles in predictable fashions, just like we did right here, that tells us a little bit about how this market respects triangles. And we've broken out of another one right here. This is really important. See, this triangle is actually even bigger than the one that we broke out of before, and we've already fallen out of it. We haven't come back up for a back test, but we don't necessarily need to, and we're already on our way down. And if we actually measure the height of this triangle, we're looking at roughly a 14% height for this triangle right here. And if we fall just a little bit more than that, that puts us down at the 24K range. So our targets are roughly, you know, if we fell down by 14% from our breakout point, you know, we'd be at like, you know, 24,000 something, which puts us right between the 24K and the 25K areas that, you know, I've been expecting on this chart. It very conveniently puts us exactly where we know that support level actually is. So, you know, when we get things lining up like this and the setup almost looks like it was made to happen, you do have to start wondering, well, you know, maybe there's something to this, right? Maybe there is actually something worth paying attention to here. You know, when multiple different things are all kind of lining up, telling us the same story, you know, this could be about to play out. So we're kind of already breaking out of that triangle. That's something worth taking into account. And the third big reason that I want to cover with you is also this descending triangle right here. Now, we know descending triangles are actually kind of a big deal for Bitcoin, right? Bitcoin historically has responded pretty well to descending triangles. It's just one of those chart patterns that if you've been watching me over the years, if you've been subscribed to this YouTube channel and so on and so forth, you're going to be quite familiar with how often this pattern shows up and how often it actually plays out. And we're kind of like at the floor of this pattern right now. Let's take a look at the time frames. We started to develop this pattern around the 10th, 11th, 12th, if you want to be a little bit pushy, of April. And we're still in it in May. Okay, so this is already now a 30-day pattern. This is a 1 month long pattern. That is significant enough to be taken seriously, right? Like, when we look at chart patterns, if it's only showing up on the 1 hour time frame or the 15-minute time frame, the 5-minute time frame, okay, I'm not going to be particularly interested. But if it's present on a very large time scale, then you can be a little bit more confident that it's actually going to be relevant in the market. And if we play it out all the way to the apex, we're nearly in June. So, this is an adequately long descending triangle in terms of its time frame. This is worth paying attention to. If we look at the target, we've got a 12% move down. That puts us down at $23,000. Let me hide my camera again so you can see that. That puts us down at 23.8, 23.9. So again, it's that same $24,000 level that keeps showing up. The breakout target puts us down there. That is very, very useful to see. And by the way, for those of you that don't know, the way we're able to get these targets is, again, we just measure the height of the pattern and then we extrapolate that from our breakout point to see where we might actually end up. So we've got the same downward sloping resistance line respected very well. We've got 1, 2, 3, 4, 5 attempts, one of them even being a fake out, which is really bearish. So we've got a very clearly tested resistance line, and our support level we've actually been holding for the past 55 days, as we know, right? That's the support level here is the same support level as right here. So we've been testing. We know that this is a support level. We've known it for a really long time. This is not new information to us, but just within this pattern, we've had 1, 2, 3, 4, 5 tests if we include right now. They're not very well spaced out, but it's super fair to say, given the price history, that this $27,000 level is an important area of support. So the chart pattern is valid, right? What I've been going through with you over these last few minutes are just checks to see, is this analysis valid? Is it worth paying attention to? Has it been drawn correctly? Has it been drawn with good practice? This is something a lot of people don't consider, is you want to have good practice with your analysis. You want to keep things the same so that they're objective, so that things are consistent, so that you're not, just because of the way that you're drawing lines, you don't want to be pulling different conclusions, because it would be an indication that you're potentially on the wrong path. So we're just trying to keep things really nice and tidy. So all of these things quite strongly hinting at, some downside potential here for Bitcoin. And, to be honest, it wouldn't take a lot to kind of send it a little bit lower. If the dollar just kind of breaks out of its sideways range that it's in right now, it would still be in this entire support range, right? So for the dollar, even though it's been stuck pretty tight, since the beginning of April, which is a long time, 40 days that the dollar, hasn't really moved, it would still be in the exact same range if we managed to get above this line and if we started trading up here for the dollar. And what that would look like is a lot of interest rate hikes and, I don't know, maybe some other central banks around the world, jumping on the bandwagon saying that the dollar is a brilliant thing to hold right now or something. I don't really know. But that's what it would look like. S&P 500, it would probably have to drop, and gold would probably have to lose a lot of its strength. I think it becomes even less likely that Bitcoin falls down to levels like 25K when you consider that it's been pretty well correlated to gold and S&P 500, for example, over the last weeks and months. And, the fact that Bitcoin is here at 27K while gold has set a new all-time high, and while the S&P 500 is at a pretty decent level, it's certainly not at a low level. I don't think Bitcoin is even lagging behind that much. What we need to keep in mind is that from its low, Bitcoin doubled, and now it's just kind of stabilized, close to its high. From its low to its absolute high, it's up by exactly 100%. And from its low to where we are right now, we're still 75% of the way up. So we're still holding a really high level. A lot of people have been lulled into this false sense of Bitcoin being really weak right now. But the fact is that it's just not. Like right now, it could drop down by a lot. It could drop down to 25K, and it would still be 62% up from the lows. So all of our markets are strong right now. Bitcoin, S&P 500, and gold. They're all very strong right now. And so even if Bitcoin drops, it wouldn't, it's not the kind of thing that's going to shake me out. I still have a lot of reasons to continue to be bullish on this space right now. Here's one reason that we might not actually get the drop, and it's to do with the kind of ways that we've interacted with this line. Now, this is really, really interesting. One of the big things that we've seen is that interactions with this trend line have resulted in really strong moves. A 25% dump here, an 11% dump here, a 21% dump right here. If we're looking at something similar, we've already produced a 21% pump to the upside when we broke out of this level. When we broke out of this line, we went up by 22%. If we're going to do the same thing right now, it's kind of like repeating what we've done with this line already. This is not the strongest analysis in the world, but the reason that it's compelling to me is we used it as resistance very reliably for a long time. This actually starts all the way back in September, and it continued to operate and serve as resistance all the way up until March. You can't fade that. That's not something that you can just readily stop paying attention to. This, from September to March, is a 6-month resistance line, which has been tested all throughout this time frame. It was tested all throughout quarter 3 and 4 of 2022, and it's also been tested in the first quarter of this year as resistance. So not only do we have a lot of tests, not only has this line existed for a long time, it's also been tested across large periods of time. So time isn't even enough to invalidate this level. And time is the biggest destroyer of everything, as we know. So if we look at it now, now that we've actually flipped and we're no longer using this line as resistance, but we potentially have it as support, this is actually pretty fucking bullish, right? This is actually pretty compelling, and it's definitely something that you wouldn't want to just, kind of not pay attention to. And at the same time, if we stay on these large time frames and look at where our support is, look at this Ichimoku cloud. You think I'm the guy that's going to get bearish right when the biggest fucking savior of this market, literally calling the absolute lows many times, is right here and it's this big, 14-15% range? I am not going to just ignore that and pretend that this isn't happening right now. Bitcoin is at a phenomenal area of support. Can it drop? Absolutely. Would it still be in support if it drops? Yes, it would. That's, one of the best things about this setup right now, and it's why I can't be scared about what we're seeing. To be honest, even though I don't think with traditional finance that we have the setup for it, if we do get the drop, I'm prepared. You guys know the deal. I've already got my stop loss and a profit, and I've already made over $100,000 on this position in guaranteed locked-in profits. I'm going to close this position in a profit no matter what happens. But I'm super happy to hold on to my long to potentially do something like this because it would just fall into such a good area. And it would mean that our long and short ratio would probably completely, even out and reach some pretty good neutral territory. Fear and greed index, we actually want to see it being pretty bearish. Imagine what would happen to altcoins, guys. We've still got a really weird situation with Bitcoin dominance where Bitcoin dominance is really high and it's not coming back down. We're on the daily chart. This is so unusual. Usually Bitcoin's dominance can't stay here for a day, but on this occasion, its strength is unparalleled. 53 days at this area of resistance. It's absolutely insane. If we're about to see Bitcoin drop and people get really scared, one thing to keep in mind, guys, is when you get coins like 𝗢𝗢𝗥𝗙𝗚𝗓 blowing up, that's showing you that the market is reaching some level of mania, some level of excitement and euphoria where dumb people who don't have any background or knowledge in this space can just turn $1 into $1 million. That's the kind of thing that happens at the end of rallies, right? I'm not saying that we're at the end of a rally now, but this kind of characteristics mainly shows up at the end. And when you consider that we produced 100% move up and we've retraced down a little bit now and we're only 75% of the way up, but we're still really high and we've just pulled back a little bit, then actually, from that perspective, 𝗢𝗢𝗥𝗙𝗚 starting to pump makes a lot of sense. It's actually what I was warning you guys would happen if you were watching this channel before the move actually took place, is I warned you guys that if Bitcoin gets up to 30K and then stabilizes, we're probably going to see a lot of fun for altcoins. So I was actually wrong about that with the major altcoins, coins like Matic, Cardano, Solana, for example. These big coins that we all know of, they haven't moved very much, but coins like Pepe have. And it's actually retraced by a lot. It's fallen down to exactly the price level that I told you guys, that this would be like the first interesting level to buy Pepe. It's fallen down to exactly this price level. And I'm going to be giving you guys some analysis on this coin right after this video on the 𝗬𝗙𝗥𝗙𝗚𝗓 Daily channel. So if you want to catch that video, make sure you're subscribed right there. My analysis for Pepe so far has been 100% accurate, and I've also been telling you guys that if we lost this level and fell down here, this would be a nice 25-30% drop, which could be traded for a really big profit, and that's exactly what's happened here. So shout out to those of you that have actually been able to take advantage of this volatility, and of course, to be able to do it on a platform like BingX is very compelling right now because they are not requiring KYC, which is very, very cool, right? To be able to trade all these crypto markets plus these traditional finance options as well, without not options but traditional finance things that are available for you to trade right now, again, all without KYC, with big bonuses of over $5,000, you are in a very, very solid place to be taking advantage of these markets. So definitely check it out using that link in the description down below if you are interested. But that is looking really nice, and I'm excited to talk to you about that in my next Pepe video as well, which you'll see on the 𝗬𝗙𝗥𝗙𝗚𝗓 Daily channel. This is literally in my trade zone right now, so I'll be telling you what I think this is going to produce in that video. But yeah, as for Bitcoin, it's hard to see a particularly scary setup on this chart, like even if it does end up dropping, just because Bitcoin has held its ground so well and because traditional finance is in such a good place. There's also a lot of news about inflation and, the US government running out of money and stuff. There's always some crisis like that going on. We're probably still going to be seeing some more money printing happening and stuff like that. So, again, just from the broader fundamental picture, I'm seeing even more reasons that, assets could continue to rise, and it's purely because when the dollar starts printing, obviously, asset prices just rise in response because it's inflation, right? So that is something which I'm continuing to keep an eye on. But there you go, guys. I really hope you have enjoyed this video. If you have, do me a favor and smash up the likes. Double check that you are subscribed to this YouTube channel and that you've got the bell icon checked as well. Obviously, this is very time-sensitive content. You want to make sure that you're not missing it. If you have enjoyed this one, you know exactly what to do. One more time, if you do want to check out the amazing offers available to you, you have a lot. You've got like over 50K in bonuses just overall by checking out all of these links. Bitflex is another exchange that doesn't require KYC, but if you don't mind that kind of thing, Bybit is giving you up to $30,000 in trading bonuses, and also trading spot is free, so you can actually buy, sell coins for free. You're never going to pay fees there. That is very, very cool. OKX is also giving you up to $30,000 in bonuses, and this is worth checking out. They also don't require KYC for, I don't want to say like low trading amounts, but I can't remember what the threshold is, but for a lot of people, this is going to be fine for you as well. If you're not, if you're not trading with more than like $50,000 or whatever, I'm pretty sure this is going to be fine. But I can't remember what the threshold is. So yeah, it's worth checking all these bonuses out. Prime XBT, if you want to trade traditional finance as well, amazing option. And this is really cool. Literally, just whatever you deposit into Prime XBT, when you use my link, you're going to get 7% back as a cash bonus. So literally whatever you deposit, it's actually better than BingX's offer. BingX was giving you 5%. Prime XBT is going up to 7%. And, like for exchanges to give you free money, it's expensive. So, these guys, they've got a really, really good offer here. So they're worth checking out if you like all those kind of free money, if you like to get those kind of things. These can, just boost your trading and whatever. So it's, it doesn't hurt to take advantage of these offers. If you have enjoyed this one though, yeah, you know what to do, and I'll see you all on the altcoin channel right now. Take it easy. Hope you've enjoyed this one. Yep. And I'm out. Cheers.